China, the US, the globe, everybody is already injecting liquidity into the system. And then eventually, sometime around 2025, inflation is going to go hard again. And then the Fed will have no choice but to stop cutting rates. And then what will happen? When that they don't need to they don't need to hike rates. They just need to stop cutting rates.
Hey guys, welcome to Capital Cosm. I'm Danny, and today we have Eric Yeung on the show for the very first time. Eric, thank you so much for coming on.
Thank you for having me on your show, Danny. It's a pleasure.
For sure. For those who may be coming across you for the first time, Eric, if you could introduce yourself and tell people who you are and kind of like your origin story, how you got into gold and silver, and investing in general.
Okay, so I'm from Hong Kong. I'm in the business of contract manufacturing. And what I do is I take designs and orders from multinational companies, US companies, and I go to China, do the due diligence, find the factory for them, manufacture the product as to the specification of my customer, and then we have a turnkey solution to deliver the product from China to the customer, wherever they are. If they're in Australia, I ship it to Australia, US, Europe, etc. So that's what I do. That's my main business. And I've been investing in gold and silver since 2008, pretty
Wow.
much. My first gold purchase.
Well,
So,
cool. Let's just dive right in then. What is your broad view of the markets, the economy, the global macro scene? What's front and center for you right now? What's occupying your headspace?
well, right now I'm really focusing, just paying attention to the liquidity that the US and China are injecting into the market.
Mm-hmm.
So as you know, the Federal Reserve already cut 50 basis points, right? So they
Right.
are beginning to step on the pedal to accelerate liquidity injection into the system. And then China had the conference and the announcement just a couple weeks ago on their liquidity injection into the system. So just recently, I think it was a week or so ago, they announced on top of the different measures of injecting liquidity, they are also going to be issuing 6 trillion RMB yen, like that's the Chinese currency, right?
Mm-hmm.
Worth of Chinese sovereign bonds. So that is coming up. That is still waiting for approval at the Standing Committee of the People's Congress in China. So that's going to happen in November. Once that happens, they will launch or issue those bonds over a 3-year period. Okay, so it's not all at once. It's 6 trillion RMB over 3 years, and that equals
Right.
to around $850 billion US.
Wow. And what are the ramifications that you see because of this?
Well, I mean, it's simple, right? The last time China um, injected liquidity into the system at the same time when the US did it, that was massively so. Okay, that was back in 2009. Okay, and they did
Mm.
it through a 3-year period. Okay, and the last time they did that, they injected 4 trillion
Okay.
Chinese dollar, Chinese yen, RMB, right,
Mm-hmm.
into the system, and guess what happened? Gold went from $900 or 700, sorry, 700 to around 1900. And
Right.
silver went from around, let's say, $14 to 50 within a 2-year period. So that's
And,
what happened last time
and
when that
so
happened.
did a bunch of other commodities too.
Yeah, absolutely. Like the entire commodity complex got lifted when that happened back then.
Was there one commodity that benefited more than the others?
I think if you look at percentage wise, silver. Went from
Mm,
14 to 50, right? That's a 3.5x right there.
right.
Yeah.
Well, we have our own kind of liquidity injection probably coming down the pike, like you alluded to, with the Federal Reserve having cut already 50 basis points, and it's looking more like 25 basis points for the next meeting. What exactly does what exactly can the Fed do at this point? It doesn't seem like it's impacting the bond market anymore because the bond market is diverging away from the Fed, right? Because
Hmm.
your 10-year yield is spiking while your Fed funds rate is going down.
Yeah, I mean that makes sense too, right? Because you have the breaks,
Mm-hmm.
and these guys they're no longer adding to their U.S. Treasury holdings. I mean, some people are saying that they're decreasing it or they're letting stuff mature, they're not adding. It's essentially the same thing to me, right?
Yeah.
So you have less buyers of US Treasuries, and the US Treasury Department has to sell a lot of US Treasuries. Some people are telling me $10 trillion, right, in the next 12 months. So it doesn't matter what the Fed does with its benchmark raise. If you have a scenario like that, yields are going to have a lot of pressure to go up, especially for long-term, long-duration yields, right?
Mm-hmm.
Nobody wants to hold long-duration US Treasuries in that scenario.
So let's talk about the BRICS for a second. They had their big meeting in Russia a couple of days back. Many people were expecting them to announce a gold-backed currency or or maybe a commodity-backed currency of some sort, but nothing like that came to fruition. Number one, how far away do you think we are from this BRICS settlement currency that we've been hearing rumors about for quite some time? And number two, why why do you think that they just continue to, so at the last BRICS meeting, they just released a plan, another plan or projection for a currency. Why do you think they're taking the slower approach?
I think, first of all, the BRICS meeting, I believe, is next week, so it hasn't happened yet. It's coming up, and the stuff you talked about is what is being, I guess, distributed to the public, right? What they are going to talk about, what they're going to be discussing, and in terms of a BRICS currency, I always had the stance where if it happens, great. Some people are saying that the BRICS currency is going to be the unit with a 40% backing with physical gold, right? If it doesn't happen, then all these big BRICS countries will continue doing business with their local currencies, and they have to continue settle their trade balances with physical gold, as they have been
Mm-hmm.
in the last 2 years, right? I mean, the bottom line is nobody, none of these guys really trust the US dollar or the US Treasury anymore. Look at what the US did to Russia. With a push of a button, they can freeze Russian assets.
Yeah, I remember
So
back
that's where
in,
I'm coming from. Yeah.
yeah, 100%. I remember BRICS, getting their origin back in the early 2010s. And then you stopped hearing about them for almost a decade. And then all of a sudden, after the Ukraine war, BRICS popped right back on the scene. And it fits well with what you said, right? Uh, there needed to be a reason uh, for a BRICS currency to happen. And the U.S. precipitated it by sanctioning Russia and thereby nullifying its status as a safe, not safe haven, but as a haven for the rule of law and capital. The two are interjoined. What was BRICS? What was BRICS? Prior to 2 years ago, was it really kind of under the radar, so to speak? And were they always working for this currency, or just simply, like you said, a response
I
to the
think
Ukraine war?
they have been always working on the dollarization. Is the Ukraine war just accelerated it.
Mm-hmm.
That's what I think. And we are like, the BRICS countries, each of them have their own prerogatives, right? Like Russia really, really wants the US dollar to lose more significance because it wants to disable the Americans' ability to print money to fund their global wars, right? Especially against Russia
Yep.
in Ukraine. So that's Russia's prerogative. China, I mean, China's making US dollars, right? So China is trying to milk that cow as long as possible, basically. That's where they're coming from, right? So China is not in a particular urgency to basically disable the US dollar,
Hmm.
right? Because China is still semi-running on a euro dollar system, right?
Yeah.
Even though it's making headway to move away from that. That takes time, right? With the RMB going international, etc.
Yep. Do you ever see a scenario where where China or the BRICS alliance just dumps their treasury holdings all at the same time?
I uh, People ask me that question. I think that will only happen if a kinetic war is inevitable between China and the US.
Mm-hmm.
But as long as the China and the US are doing business, I don't see that happening because they'll be shooting themselves in the foot. Like I said, they are still trying to milk that cow, right? Still trying to gain as much economic benefit from this US dollar trade as possible. So you see, like, the way that China pushes this is really gradual, right? With, the way that it rolls off old US Treasuries. It's not really, I mean, people are saying that they're selling it. Are they? Right? Or are they just letting, matured
Expire.
US
Yeah.
Treasuries expire, right?
Mm-hmm.
So I hope that answers your question. So I think every big BRICS country have their own prerogative, and they handle the situation in a manner that benefit their own sovereign country the most.
Yeah, it's kind of strategic patience, if you will. Here in
Yeah,
America and the
exactly.
West, we have very short term time horizons, so we expect everyone
Mm.
else to operate in our quarterly and yearly time horizons. But that's not the case with China and Russia and some of these other countries, Iran. Uh, where does the Shanghai exchange fit into all of this? The spread between the gold and silver prices on the Shanghai has started to really expand out relative to the COMEX. Is the Shanghai playing a role behind the scenes? Do you think in with this BRICS currency?
Absolutely. Because what happened, okay, so the Shanghai Exchange allows China to price gold and silver in their own local currency,
Mm-hmm.
in RMB yen, right? In the past, before the Shanghai Exchange existed, everything was priced in US dollars, right? So what happened in 2021, 22 was that the Federal Reserve was increasing rates, and China didn't really increase their rates. I mean, they might have increased a bit, but there was a credit spread
Mm-hmm.
between the US Treasury bond and Chinese sovereign bonds, right? Okay. So there was a lot of pressure for the RMB to devalue, for the Chinese yen RMB to devalue against the US dollar, even though the Chinese RMB yen is on a two-tier system, right? You have domestic RMB and you have offshore RMB. Even with that system, there was a lot of pressure for RMB to devalue. And you saw, the Chinese yen RMB went from around 6.1 RMB to one US dollar to it dropped to around 7.5 at the lowest, right? Remember that, Danny?
Mm-hmm.
Yeah. So that was because, like I just said, because of the credit spread, right? Okay. So when that happened, what happened? The Chinese government stepped in and they stepped up the importation of physical gold or the purchases of physical gold. That's when the SGE, the Shanghai Gold Exchange, gold price versus the COMEX, the LBMA gold price had a big arbitrage, right? Okay. So gold was flowing from west to east. That's what happened, right? People wondering why did China do that? Why was China paying more money at the Chinese exchange um, versus like a Western exchange? Well, guess what? That was China's way of trying to keep the US dollar, Chinese dollar exchange rate stable. So once they did that, the Chinese RMB yen stopped falling against the US dollar.
Hey guys, quick pause. I won't take too much of your time, but if you're looking to add into your gold and silver stack, please consider Miles Franklin. More specifically, email them, info@milesfranklin.com, and tell them that Capital Cosmos sent you in the subject line to unlock special pricing that you won't find on the website. In the unlikely event that you don't like the prices, you could always not buy. There's no commitment necessary, but I do recommend Miles Franklin for a number of reasons. The customer support is top notch, the prices are great, and I know the people there. Great people all around. So with all that said, let's get back to the video. Thanks, guys. I see.
You see that?
Yep. Yep. Hey, there's actually someone at my door. Let me go
Yes.
grab it real quick. I'll put a pause
Okay.
on the recording.
No problem. Okay. So so China stepped in, bought a bunch of gold, and it kept the US dollar, Chinese yen, RMB exchange stable. That's what happened. And now what's happening is China waited until the US government, the Fed, starts to inject liquidity into the system before they made the announcement of their own stimulus program, of their own liquidity injection. For the same reason of why they bought gold in the last 2 years, to keep the RMB US dollar exchange rate stable. You see, if China announced their stimulus program, or if they, let's say, injected liquidity into the system before the Americans really step on the gas, with the Fed cutting 50 basis points, right?
Mm-hmm.
Then there'll be even more pressure for the RMB yen to devalue, right? So
Yep.
that's why they waited. That's why they waited until now, right? And what's going to happen? My suspicion is that once China actually injects the capital into the system, okay, that's we're talking about November, right? They will have to step on the gas pedal again in buying lots more physical gold, okay? Because again, China's prerogative is to keep everything stable. China wants the RMB US dollar exchange to be stable. And that's like the gold button is one of the tools that they have in their toolbox to make that happen.
Right.
So does that answer the question? I hope it does. Yeah.
Do you think their central bank coordinates with the US Fed in their rate policies?
I don't think so. But I think there must be some understanding between the two.
Mm-hmm.
So, might not be explicit official coordination, but they all know each other, right? So there might be some virtual signaling, I guess, between the two parties. Yeah.
Do you think that China's pricing in is done pricing in lower rate cuts in the United States in this case, if they've already hit the gas pedal now, in the sense that they don't anticipate any further downside on the Fed funds rate? Otherwise,
I think they are anticipating further downside on the Fed funds rate.
Okay,
because the 6 trillion that we talked about, RMB yen, which is $850 billion US, they are not going to issue all those Chinese sovereign bonds all at once. Their plan is to issue that over the next 3 years. So that answers the question because they
Right.
issuing that over the next 3 years. They're anticipating the Fed is going to cut more rates down the road.
How low do you think they anticipate the Fed going in this case, given the number that they've put out?
I'm thinking probably, I've said this before. I think probably 150 basis points max
From here or from
from here,
okay.
from here. Yeah, max. The reason being, because I think the inflation genie is going to come back to haunt us very
Right.
soon. Yeah, so that's the reason.
You're already starting to see it with gold. I mean, like you said, gold's up to 2,700 almost just right now on the COMEX. And if you look at gold as a barometer of what's to come from an inflationary standpoint, gold started to rally first before anything else in 2020. And then you saw
Hmm.
the rest of the commodities follow suit. Same thing in the last commodity bull market in the 2000s, right? You saw gold rally first and then everything else take off right behind it. Is that typically how it goes? Is there an order of operations to this stuff, or was that just simply chance?
No, I think you're right. It usually gold moves first, and then silver, and then the rest of the commodity complex, right? But the
Mm-hmm.
one thing different this time that is very interesting is that if you notice, oil is down.
Yeah.
Oil is down, even though there's emergency in the Middle East. There's almost going to be a full blown war in the Middle East, and
Mm-hmm.
oil is still sitting at around 70. And why is that? Well, the
Yeah.
reason is because China's oil imports actually went down in the last year.
I
Okay.
see.
Now you might think, well, China's in a recession, right? No, because China's electricity consumption went up, and that's the barometer for Chinese economic activity. So Chinese electricity generation and usage went up, but crude oil import went down. Now, what happened? Well, China, if you look at the data coming out right now, over 50% of new cars being sold in China are electric vehicles, EVs. And you know what, Danny? I go to China a lot because I live in Hong Kong, right?
Mm-hmm.
And when you go to China, almost everything on the road is a EV.
Yeah.
There's no smoke anymore, no smog. I mean, the air is clean. It's incredible.
Yeah. I mean,
And
I was in China 4 or 5 years ago. I went to Shenzhen and Guangzhou as well,
right,
right next to the border. And when you're crossing the street, you can't even hear these motorcycles or like cars coming by. You have to actually, you have to be very careful out there.
yeah. And now it's even like even crazier. Now there are more like vehicles on the road than the EVs, right? So China didn't do it because of trying to be environmentally friendly.
Mm-hmm.
I mean, yeah, some government officials might care about that, but China did it because they want to lessen the dependence on crude oil, and they're being successful right now at it, right? Their oil import went down while their economic activity and electricity generation went up. So what they're doing is they are, yes, they're using more energy because it's a growing economy, but they are generating that electricity from nuclear energy and also from hydro energy as well as thermal coal, which China has a lot of. China doesn't have a lot of crude oil geographically in China, but China has a lot of thermal coal.
Right.
So you see what's happening is lessening its dependence on a third party for energy consumption. Okay, so what's happening? What I see is that the crude oil that China is getting from Russia and some from Saudi Arabia is already enough to satisfy its crude oil needs, especially now that you have this EV revolution in China that is so successful, right? And I tell you, Danny, in China and in most other places, I mean, especially in China before, right? 50% of the crude oil that they import into China, they used it on ICE vehicles and buses, etc. Imagine that 50%.
Mm.
Imagine if that number drops to 35 or 25. That's a 25% decrease in overall Chinese oil consumption.
Yeah.
That's a huge number, right? Now, as we both know, international oil price is driven by the marginal oil supply and demand, right? So if you have the marginal demand going down 25% globally, I mean, oil is going to go down, and it's happening. I know a lot of people, were saying that oil would go down because of global recession, but at least on paper, there's no recession. I mean, growth might be slowing, but we're still growing globally,
Yeah. It's not
and
negative.
especially in China, right? It's not negative, right? So what, like I said, what happened is EV, and
Interesting.
China is being very successful. And not only China is doing that domestically, China is also exporting the EV to other global South countries so that they are going to be less dependent on crude oil. And if those guys are less dependent on crude oil, that's another, kind of strike against the US petrodollar.
Interesting.
Make sense?
So wouldn't the
Yeah.
US be incentivized to stick with their oil gas powered cars then, if that's the case, instead of pushing EVs as part of their campaigns?
Well, I mean, if you listen to what Donald Trump is saying, he's not really like they're not really pushing EV, right?
Mm-hmm.
They are kind of like neutral on the whole EV issue,
Yeah, but
which makes
they were
sense,
really
which
big
is
into it. They were really big into it a few years ago.
I think they were big into it a few years ago, and then they realized what the China and the BRICS countries are doing.
Mm.
You see, right? I mean, they didn't never would have guessed that China would be able to leapfrog them in the EV technology. I mean, Europe is saying that they will add 40% tariffs on Chinese EV imports because they are unable to compete with China. And I think the US done it already, right?
Mm-hmm.
Tariffs on Chinese vehicles. So yeah, it's happening.
What's the trajectory of China's oil imports moving forward? And then also, what was the existing rate of change from let's say 4 years ago up until today? How drastically did they reduce their oil imports in that time frame, and how much more is it projected they continue to reduce their imports?
Okay. So I don't have the most recent numbers because this like
Mm-hmm.
literally just recently happened, right? Like the announcement. That was,
Right.
I think, believed by Bloomberg, right? But you can tell by the level of EV adoption, like how much lower this is going to go. Like I said, you just do the calculations, right? You look at, 50% of all oil imports in the past are for ICE vehicles in China. And you have half of that is going to go to the EVs within the next 5 years. So just do the math. It's going to decrease China's oil consumption import is going to decrease by 25%
Wow.
in the next 5 years. If you look at those numbers, right? Am I correct?
Mm-hmm.
That's basically it, right? Yeah.
And this is unprecedented because if you look at energy consumption across various sectors, oil, coal, nat gas, even wood, for the last 2 centuries, we've never as a global society, that is, we've never reduced our consumption of one in favor of another. We've just stacked higher density energy sources on top of each other. But it seems like
Mhm.
China's going against that paradigm.
Yes. So this is, yeah, I mean, this is huge in
Mm-hmm.
my opinion. And I have to thank my friend Jeffrey from Graph Financials for pointing this out to me. I mean, he was the first guy who actually put this all together. And to be honest with you, Danny, before I talked to him, I was like one of those guys who believe energy prices are going to go up, and that there's a no, sorry, not energy price, but oil price is going to go up, and that there's an oil shortage, right? But now with this EV situation going on, at least for the next couple of years, I do see um, oil prices being suppressed just because like China is such a big player
Mm-hmm.
in terms of oil consumption.
I see. Even in the face of war in the Middle East.
Well, that's the wild card, right?
Yeah.
It's like I mean, there's war right now, but then oil's $70. Who would have
Mm-hmm.
imagined, right? And another thing, because me and you are interested in gold silver miners, right? Think about what's happening.
Their
Like what
input
we're
costs.
talking about here, right? All exactly.
Input
All
costs
the
coming down.
all these commodities are going up. All the miners who are digging up these commodities are going to have higher proceeds coming in, but the input cost is going to go down. This is almost like if I may compare this to the 1930s, Homestead gold mine, right? I mean, back then the price of gold was pegged, I believe, $34 per troy ounce. But then all these gold miners' stock prices went up because the input costs went down during the Great
It's a very
Depression,
good point.
right?
Yeah.
I mean, like we're going to have a perfect storm for the miners, in my opinion. And you're probably already seeing that with uranium miners. I see that uranium miners right now are outperforming gold and silver miners
Mm-hmm.
because of that.
Interesting.
Makes sense?
Yeah.
Yeah.
Yeah. And gold miners, I mean, they haven't done too badly. I mean, they've pretty much tracked the price of gold, which is okay, but you expect these miners to outperform gold, at
Oh
least
yeah.
as a whole. So do you
I
think
think
gold?
gold and silver. Yeah. Sorry. Go ahead. Yeah.
No, I was gonna say, do you project out that the gold and silver miners will begin to outpace their metals counterparts?
Yes, I've said this many times on my Twitter accounts. I believe that gold and silver miners will eventually wake up, but they need to wake up. Like there are a couple requirements, so to speak, before they can fully wake up. Number one is price level. So I believe gold really need to break 2,700 US dollars per troy ounce, and silver needs to break 40 US dollars per troy ounce
Yeah, I think we've already hit
before the
20.
miners really. Yeah, sorry, go
Yeah, I
ahead.
think we've already hit 2,700 on gold as of today. Is the last time I checked, or just very close to it.
It hit it several times today, and also I guess a couple weeks before, right? But I'm talking about sustainable
Yeah.
breakage above that level with momentum. So that's the other part. I talked about price level. The other piece is momentum.
Mm-hmm.
Okay, once you have price and momentum, the miners will wake up. These miners trade on momentum, my friend, and price level. They trade on the future anticipated price of the metal, right?
Right.
So if the trajectory is up, for the next let's say 6 months, these miners are going to be explosive.
I see. I want
Yeah,
to take us back to uranium for a second. All throughout this past year, we saw at one point the uranium price at $110, but the
yep.
miners never really traced that action. Why was that? And why do you think that the miners are pricing in these reduced input costs now, where they when they haven't done so before?
I think what's happening, and I'm looking at it from my perspective, because there are a lot of experts out there on uranium, but from what we just talked about, okay?
Mm-hmm.
So the energy consumption pie is growing, right? We talked about that because economic activity is actually growing, even though the growth is slowing down, it's growing. But then crude oil's piece of the pie is not growing. So what is growing? Energy sources like thermal coal and uranium is growing, right? Especially the fact that we both know uranium accounts for at least 20% of the base power load, right? In most advanced countries. So, with the Chinese energy transition happening, and we're seeing the results of that right now, it just makes sense that it took time for the market to absorb the last uranium price up
Hmm.
from 50 to 110, right?
Right.
So now whoever wanted to sell, like whatever uranium they had that they got in cheap,
Mm.
is already digested, is sold. Okay? So now we're ready for the next leg up. Plus the fact that, like I said, you know, um, whatever oil is losing is being gained by the nuclear power guys. Make sense? The
Yep.
pie is growing,
Yep. It
right?
has to go
So that
somewhere.
means, yeah. And so, that money is going to go into uranium, in my belief.
Interesting.
Yeah. Because the power distribution network is different for EVs, right? Oil is like point to point, right? You have crude oil, dig it up, refine it, you pump it into the car, right? With uranium, is you have like a big power plant, or in the future, modular power plants, and then you have a big electrical network, and that's how you pump the electricity in, right? So it's a completely different kind of distribution system.
And the uranium market is much smaller than the oil market for sure. I think the
Oh
total
yeah,
market cap is like $40 billion across all the
yeah.
mining companies.
I just read somewhere today that the power companies are about to jack up, the electricity prices by 40% over the next 2 years. Imagine how much room they have for the uranium price to go up
Hmm.
when that happens, right? I heard somebody said that if they jack up the price by 40-50%, the electricity price, they can potentially absorb a uranium price of 500 US dollars per pound.
Wow.
So that's like a 5x from here, right? But again,
That's
I'm
yeah,
not,
more actually.
yeah, I'm not, yeah, exactly. I'm not a uranium expert, so take it with a grain of salt, what I just said in terms of uranium.
Hmm. How much torque does like the typical like uranium mining index, like the URNM have relative to the metals price in that kind of scenario? Because you said it's about a 5x, maybe a little more than a 5x. Uh, what could you see URNM going to or URA going to if that was the
Probably
case?
a 2x because I own URNM and I own chemical.
Hmm.
And in the past, it's the 2x to the metal price. I also own the Sprout Uranium Physical Trust. So
Right.
just in case I'm wrong, but with the ETFs, I see a 2x leverage, and then with the mid-tier mid-tier miners like NextGen, um, etc. Right? I see or uranium royalty company, right? URoy. I see those guys having a higher leverage, maybe
Interesting.
5x. Yeah.
Wow. So a
Yeah.
5x in the metals price would yield a 10x in the ETFs, essentially.
No, the ETFs, I think a 2x to the metals price. So yeah, so a 5x to the metal price would be a 10x to the ETF. You're correct. Yes.
Yeah. Interesting.
Yes.
And then could you say the same for the gold ETFs and silver ETFs, GDX or SIL? Or is there
I
different?
th I think it's similar. Yeah. ETFs are usually 2x, but like you don't expect gold to go 5x, right? In the next
Right.
I mean uranium can do it, but gold no,
Yeah.
difficult. Yeah. I don't see I like a lot of people keep telling me the US is over, the US dollar is over. It's not over. They're kidding themselves. I mean, even with the BRICS running full steam to de-dollarize, half of them are still running on the euro dollar system.
Hmm.
And the ones who are aggressively de-dollarizing, um, half the economy is on the euro dollar system. So it's
Yeah.
not going to be over in a couple years,
What do you think?
right?
What do you think
Yeah.
comes next? What do you think comes next for the global economy, China, U.S., etc.?
I think what will happen, this is my personal opinion, is that China, the US, the globe, everybody is already injecting liquidity into the system. And then eventually, sometime around 2025, inflation is going to go hot again. And then the Fed will have no choice but to stop cutting rates. And then what will happen? When that they don't need to they don't need to hike rates. They just need to stop cutting rates. And at that stage, maybe things will stop blowing up.
What will go up? The
It might
VIX?
be a bust. The VIX will go up.
Yep.
Yeah, sure. At that point, right? Can you imagine like a cocaine crack addict is dependent on the easy money, on the Fed pumping in liquidity, on China pumping in liquidity, and all of a sudden that stops cold turkey,
Yep.
right? I mean, that's going to. I mean, I don't want to sound like a like an end of the world person or like a doomsday guy, but I mean, when that happens, a lot of things are going to deleverage. Things are going to blow up. So that's what I see in the next year.
Interesting.
Yep.
I think we've covered a whole host of things here, Eric. Anything else you want to talk about before we sign off?
No, I think we're really good. You want to talk about silver? Like, what's
Yeah,
happening with the silver market? Like, why is it still stuck at 30, I
sure.
guess?
Go for it.
Yeah. So yeah, silver. Um, I believe the silver market is highly manipulated, and the silver price is being dictated by the paper silver market. Okay, and I'm a believer of Pep Butler and a gentleman by the name of David Jensen. You heard of him?
David
He's a
Jensen.
mining expert. Jensen, yeah. He
I think
writes yeah, sorry, go ahead.
no, I think I've seen him on Twitter. Is he on Twitter?
No, he got kicked off Twitter, but he's on Substack and he's on YouTube. But yeah, so these guys write in detail, in depth, that the silver market is paper driven and is highly manipulated, right? So I believe this is how I believe the silver market works, right? In the past, there's just enough marginal supply surplus of silver and above ground silver storage, stored silver for these manipulators to play these games. So as long as there's like a little bit of surplus, they can pump the paper price up, down, sideways, whatever. They determine the price, right? But as I understand from a chart from the Silver Institute in 2022, that changed. Mining supplies no longer satisfy the physical demand of the of industry, because at the end of the day, silver right now is mainly consumed by industrial use, like
Mm-hmm.
EV, right? We just talked about how EV is picking up steam, right? So that's a huge thing. It's sucking up a lot of silver. So there's not enough mining supply for that. So they are eating up the above ground silver, store silver. Okay, and I see what's happening now is that we're at a juncture where, and David Jensen said this as well, is about to break the silver market. Once it breaks, what's going to happen? The silver price is going to find the new equilibrium so that more silver production and above ground silver will come back into the system to satisfy the needs of the buyer.
Mm.
Does it make sense? Right? So we like it has to go higher because at $30,
There's,
the guys with the silverware, they're not going to come out and
there's
smelt
no
it.
incentive.
It's too low. There's no incentive, right? And then for the junior miner or the explorer, or whatever, there's no incentive to dig 100 holes. I mean, they are constrained by budget, right? Because the
Mm-hmm.
silver price is too low, right? But at what, 60, 70, 80, $100, the incentive is here, right? So I believe silver is about to embark on an epic run to a price where the incentive will be there for more supply to come back online. Make sense?
And it
That's
sounds
what I
like,
believe.
yeah, and it sounds
Yeah.
like from your earlier analysis that that would be within the next 2 years.
Yeah, I think it's within the next 2 years, right? So that once that happens, and I like a lot of people come to me and they say, Eric, it's going to go to 500, 200, 1,000 silver. No, it's not, because at a certain price, let's say 100, the incentive is there for a lot of silver supply to come back online, right? So once that happens, let's say it overshoots 100, it goes to 160, 200, right? That's just speculators using leverage to bet on the price of silver. Does that make sense? Right?
Mm-hmm.
And then the market makers, manipulators, whatever you call it, right? They have tons of ammunition at that point. You smack it back down. Talking about the silver price, right?
Yep.
Am I correct?
Mm-hmm.
So I warn people who comes to me and say silver is going to go straight up to 500, because that's just not how markets work. They're going to get hurt again if they think that. I believe silver is going to go up. Yes, it's going to go up to a price where, like I said, we're incentivize industry and individuals to put silver back into circulation. And once that happens, silver is probably going to correct, and then it's going to settle on a new equilibrium price that is much higher than $30 per troy ounce.
Much higher. So is
Much
there like a
higher. So
ballpark?
maybe like the next equilibrium is at 55, right?
I see.
60. But my point being is that it's not going to be a straight up path unless, I mean, these people tell me they think the US dollar is finished. And then, I mean, what can you say, right? At that point, right? But
Yeah.
I don't believe that,
All
right?
bets are off at
I
that
told you
point.
already. Yeah, all bets are off, right? But I don't believe that, right? So there you have it.
Totally. Well, hey,
Yeah.
Eric, thank you so much for coming on, my friend. Where can people find you? They want to listen
They can,
to more.
yeah, well, they can find me at Twitter or X at King Kong 9888. Okay, that's my
Okay.
handle on X. Okay.
And you see it's right there on the screen. So yeah, if you guys want to follow Eric, be sure to do so at King Kong 988. So all right. Well, thanks for coming on, Eric. And thank you guys for watching, making through this video. If you enjoyed this video, give us a like. If you agreed with Eric's analysis, right, go, Eric, go in the comment section. If you disagreed, let me know why. Comment down below. I read all the comments. I may not be able to respond to every one of them, but I do read the comments. So be sure to drop a comment down below. Also, check out our Substack, capitalcosm.substack.com, for perks that you won't find here on YouTube. Click the link in the description box to our Substack and check it out. And with all that said, I'll catch you next episode. Bye, guys.